Welcome to the STARS program, seniors taking active roles in society. And now, here's your host, Anita Finley.
Rob Colson, he wants to help people, and a lot of people help people. We just heard Dean Webb, and he helps people in a different way. But Rob Colson has been working in the insurance field for many, many years. Even though he's very young, he started early, and he really loves this. He's an amazing guy, and so we didn't know there's so many facets, Rob, of insurance. You know, there's car insurance, there's boat insurance, there's life insurance. And there's another kind of insurance that I think you want to tell people about.
There is, Anita, and thank you for having me again today. There's a lot of different vehicles in the insurance industry today, and a lot of them are very misconstrued. As a result of that, a lot of policies are going unused. Portions of the asset base that could be used for their living benefits are not being used. And we actually go along with the term life is for living now, should be your life insurance. What you were describing is called a life settlement. It's a product that has been around for quite some time. It is one that I'm actually sure you're very familiar with, because I actually believe that you participated in one yourself.
We did. We did very well with it.
So what a life settlement does, it allows somebody who has an unneeded, unwanted, outdated asset, which is their life insurance. If the family no longer needs that coverage to offset the money responsibility of the money earner for the family, kids are out of the family, they don't need to offset estate taxes, they don't need to offset the mortgage on a house should something happen to the money earner in the house, that could become an unwanted asset for that household. So what a life settlement allows us to do is tap the institutional market for the client. And what the institutional markets do is they will pay on certain terms, on certain criteria, above and beyond any cash value that might be in the policy. And even some policies, as you know, term policies have no cash value. Those policies can also, in certain terms, in certain contexts, be converted into cash for the client.
Yeah, see, and I never knew that about term policies, because we had not a term. We had a what do you call it, a whole life?
Whole life or universal life. 5-10 years ago, a lot of those products were not sellable. Today, they are. The institutional marketplace has gotten very strong over the last 3, 4, 5 years. And the money now is available for people to raise that cash, maybe move that into an income-producing vehicle for them, and offset some income needs they have. You know, they can move the money out of a dead asset, which is that life insurance policy, that they may no longer need for that estate for tax reasons, offsetting responsibility, cash reasons. But most importantly, they can take that cash out of that policy and take that and use it for themselves, for their living benefits.
Yeah, well, it was on my husband's life insurance, and it was a large policy, but there was so much money that we could make, because you're right, there's a whole group of, I guess, or I don't know, you know what they call them in these in the insurance world, and they put all these policies together, and that's an investment tool for people. So when he sold the policy, though, then we went out and got another one, but just small, for some life insurance, but it wasn't that very big policy. So it really worked out very well for us. It takes a little time. You have to have someone like you, very smart person. Don't let people kid you. This is a involved situation. Someone has to really know what's going on. And so Rob Colson is why you want to call him and tell him what you have, and then he can look it over. I mean, you could probably do this in 5 minutes. You'd know so quickly, wouldn't you?
We really can, Anita. And what we do is our services, and I want to bring this up, is most importantly, are free. Our analysis, our cost analysis programs on any product that we do is absolutely free. It's very non-intrusive. We don't need your Social Security numbers, the last time you saw your doctor, and all those little items that you're going to need. And we can evaluate that policy and let you know that if it's saleable, not saleable, or even better, we might be able to make a recommendation on a change on that certain policy you have. Worst case scenario, we can come back and tell you, you know what, Anita, you have the greatest policy ever. Just keep it in place. It's a perfect policy, and I wouldn't make any changes to it. We would tell you that as well.
And you do have that reputation. You've been in the business a long time, so you are very honest because, when you do things that are fair, it always comes back in different ways. So this is Rob is the US Insurance Auditors, LLC. That's what his company is. And they do a lot of things, but right now we're talking about insurance. Let me give you a phone number. You can reach him. He's really local, but I'll give you an 800 number. It's 800-218-5033. That's 1-800-218-5033. You can actually get on their website, too, which is usinsuranceauditors.com. Remember, this is Pencil Talk Radio, so make sure you have your pencils out. But it may be time to refinance your life insurance, and it also may be time for you to think in terms of what you can do with the money. And life settlements they're not very common because a lot of people don't know really what to do. A lot of insurance people just don't want to tackle things like that, do they?
They really don't, because most insurance agents, what they do is they sell a policy one time to that customer and never revisit that policy again. And it really is unfortunate, because I can give you a couple real-life examples here that will let you understand how different the marketplace is today and how different the pricing is today. We just finished a case last month, a very large planning case. This couple had purchased the policy when they were 41, 42 years old. The exact same death benefit, per se $7 million death benefit. That policy purchased 20 years ago today was more expensive than the policy that we rewrote on this couple, who are now in their early 60s, 20 years older, and the cost of those premiums to the estate went down almost $60,000 per year.
Amazing.
Based on the combined life expectancy of that husband and wife, 25, 30 years, you're looking at an estimated cost savings to that estate of $1.6 to $1.8 million. And we didn't do anything to change the planning of the estate. We replaced the $7 million with the $7 million policy. We gave them a A-plus rated carrier. The couple now is 20 years older. As you know, Anita, as people get older, the health usually declines. The truth of the matter is they were relatively healthy still. 20 years later, we could reduce the cost of those premiums over 50%.
Do people still have to have a physical exam when they're redoing a new policy?
They do. So generally speaking, their health needs to remain static, relatively good. But, with the increase in longevity and health and science today, that's a lot of people. That's why the statistics read today, 68% of people are overpaying for their life insurance.
Yeah, when you first told me that, I said, my goodness, you have to come on the radio. You have to tell people that, because that's not fair. It's very interesting that I've gone to dentists, and they certainly have pricing from years ago, and yet I know a lot of other new people are going, and they're getting it much cheaper. And that's the kind of the same thing. Some people are still doing it from before, and the dentist doesn't say probably to them, listen, I don't have to charge you this anymore. You can still pay, you can pay much less. They're just not doing that. And that's really what you're doing for these people. They have a policy. They don't think to go back and say, hey, can I get this for less money? It takes a professional to say, wait a minute, you don't have to be paying that. And you have a way, I guess you know what the insurance companies do, and you have a huge computer system that shows you what every policy requires.
I'm glad you brought that up, Anita, because that is what really differentiates us as an independent broker. It allows us to access any carrier across the United States for the client. So what does that mean? Every carrier has their own book of pricing, their own mortality tables, their own longevity tables. So what that means is $1 million policy at Prudential is not the same as $1 million policy at MetLife, or $1 million policy at AIG, or $1 million policy at any insurance company you would call today. They will all have different pricing on the same exact age, on the same exact male or female, in the same state. So what that allows us to do is shop these companies against each other and guarantee that the client gets the lowest rate. We do not deal with any companies that are not A-rated or better. So it eliminates any of the second-tier insurance companies. When most people think, oh, the only way you could possibly reduce my premiums, you're going to get me to a second-tier insurance company. That could not be further from the truth. We deal with only A-rated paper, and we have the ability to arbitrage these carriers against each other. So if John Hancock has the best rate on a 60-year-old male in Boca Raton, Florida, that's the carrier that we're going to go with that client. We're not just going to go with a MetLife product because we have agents for MetLife, or a Prudential product, or any one of these captive products, whereas that agent, that broker, can only offer that one product to that client. That's what really makes us different. That's why we can guarantee the lowest cost to the client. And when we propose and put together what we call our discovery program, we actually analyze all of those carriers. And when I sit down and do that final discovery process with the client, I can show them, as I have shown you, the different rates.
Oh, yeah. It's amazing.
For each carrier down the line, and it's an astronomical difference from carrier A to carrier Z today.
Well, why would they do it knowing that people can find out the difference?
They do it because they have to. Each insurance company has to have their own tables based on their book of business, meaning they can only carry so many people at 65, 75, 85, knowing that so many people, they're going to have to pay those death benefits as those people pass away on the back end of that business.
Right, so they have to keep that money in reserve.
Exactly correct. So a 20-year-old is going to get a better rate with, say, a Prudential product than he would with a MetLife product. A 40-year-old might do better with a John Hancock product. Every age group is going to have different pricing based on those carriers' book of business.
So are there a lot of people like you out there who can handle all these different products and have been so well schooled in this? I mean, probably across the country there are, but right here in the South Florida area, do you know of a lot of people doing what you do?
Not from the A to Z process that we do. And that is because of the brokerage company that we have the ability to facilitate anything from regular financial planning, estate planning, all the way up to life settlement planning. So what we can do is a full analysis for a client. Whatever they have, we can take a look at it, take that snapshot, come back to them and tell them if their money's working for them.
Okay, let me give you a phone number again. I think it's really important. I mean, there's no fee, and Rob is really a really nice guy, I have to tell you. So you'd like talking to him, and let me give you his phone number. It's 1-800-218-5033. It's 1-800-218-5033. He's right here in the south part of North Broward and South Palm Beach County. So he'll go anywhere, though. If you have a need, he'll find you. He'll call you. So let me also tell you, you can go on his website, which is usinsuranceauditors.com, usinsuranceauditors.com. And he's not an accountant. That's not the auditor. The auditor means that he's going to audit and look at your insurance policies, what you have now. And you may have some other questions about some financial paperwork that you have. He's very good at all that. So you just call him. He'll sit with you, and he'll see what he can do to help you. Again, it's 800-218-5033. Let's get back to the insurance settlements, cash settlements. So how would this all begin? What are you going to do? You're just going to go and have a consultation, and then what would be the next thing?
On the life settlement side, that requires an application that allows us to get releases from the insured to access their medical records, as well as access the insurance companies, so we can pull up-to-date illustrations and what's called a verification of coverage. Those forms allow us to work on behalf of the client, speak directly to the insurance companies, as well as any providers, doctors, et cetera, that we need to get medical records from. Once we gather that information, that process takes 3 to 4 weeks. Of course, doctors' offices don't move that fast these days, as we all know. We get that information, and we can package that, and what we do is we send those out for life expectancy reports to the various services. They're independent agencies. We usually gather 2 or 3 on a minimum. And once we establish those reports, we can then package that. And then what our job is on behalf of the client is to broker that to all the institutions that legally buy insurance policies in the United States.
And there seems like this is a very big business. I mean, there's hundreds of millions and maybe more about people who have done this with their insurance policy. So now it becomes a big package and people invest in it hoping people are going to die. I mean, that's the idea, but they're not going to. They're fooling them. But they make money on that. And so that's what it is. There's a need for more of them. And actually people, the investors really want to have more insurance policies to buy, but they don't get enough.
That's absolutely correct. This business actually originated back in the original days in the early 80s when AIDS started coming across the United States. And as you know, from the early days of that, most people did not live more than 7, 8, 9 years on a good day. So most of those people that were afflicted were younger people. So these people had life insurance. So what it created was a marketplace whereby a buyer of that policy could put money into those people's hands, knowing that they're not going to have very long to live, so they can go for that trip to Europe. They can go take that last cruise. They maybe gift some money to their family when they have it to be able to do it. So that's how that market was created. It is now expanded into a huge market, whereas now it's in the business side of insurance. If you and I owned a business, Anita, and you were going to retire, or we sold that business and we had a buy-sell agreement on that business, but our business was valued at $2 million, so we bought a $2 million policy to offset that. What if we had paid that policy for the last 15 years? Now that business is sold, we're going to lose an asset that we paid into it for 15 years, which is in several $100,000 on that type of insurance. No, now the marketplace created a window of opportunity for healthy businessmen to sell that policy back to an institution. The win-win for the customer.
It really is.
They would have walked away from that business insurance, just for an example, and now they can reap the benefits of another cash rainbow at the end of the sale of their business.
It is a cash rainbow. I mean, I don't think people realize how much of a cash rainbow. You know, we've had all sorts of things happen to people now that give them, especially the older adults, give them a lot of opportunity, like the reverse mortgages and things that will really help them. But people sometimes have a little bit of a fear that they're going to make a mistake. They're going to do something that's wrong. But Rob would be very happy to talk to your family members and explain what he's doing. And he has so much experience. And I, as he started out, my husband did have a big policy, and we needed the money, and we did sell it. And the funny thing is, I'll just share this, that probably every quarter we get a call from the insurance company. We want to make sure my husband's still around. They're waiting for him to go. And I said, he's not going to go. Forget it. He's never dying. Because those investors are waiting to cash in.
That's right.
But because my husband actually had knees and hips and a lot of things that they said, oh, he's going to be great. You know, how long is he going to last? Well, I think we did this 15 years ago. I think so, in my brain. But it was a great thing for us. And I think that anybody that has a nice size insurance policy should definitely do this, or at least talk to you about it. I mean, they'll pull out money for themselves. You could still get them another small little life insurance policy just to, take care of what the little things they may want.
Absolutely. I'm glad you brought that up. Let me just run through that very briefly as well. There's actually another product out there that we can offer to the clients that if they had a policy that they could no longer afford, which is very much the case across the board today, their only option is to lapse or surrender that policy, right? But they might still need insurance. They might want to still leave their spouse some money, but they can't afford to carry that policy. We can do what's called a swap on the insurance. So if they were paying on $1 million insurance policy, and they were paying on that for 10 years, but they can no longer afford that policy, we can process what's called a swap on that insurance, whereby the institution would purchase a fully paid up life insurance policy for that client, so they wouldn't get $1 million death benefit because they would obviously have to keep paying for that to get that, but they might qualify for a $200,000 or $300,000 fully paid up life insurance policy.
Oh, that's wonderful, Rob. That's a wonderful thing because they're just looking for some money to be able to survive or pay for things. And no, that would be great. So then you can turn one into the other. See, people can't do these things on their own. They don't have no idea.
No, and it's really not very well advertised at all. But it's a great concept, and we've done quite a few of them.
I would think so, especially down here. Especially if you're going to sell the big policy, then they're still going to want something. Or, as you said, if they can't afford what they're doing now, you could figure out something else that they can have. Now, how serious is it if someone has some to buy an insurance policy if they do have some illness? What kind of illness will deter an insurance policy from covering them?
It depends what type of insurance. Once you get into higher death benefit or face value insurance, there's the basic majors: cancer, heart attack, stroke, renal failure. Those are almost automatic knockouts of most policies, other than what's called final expense policies or guaranteed issue policies. And those are generally smaller for basically burial costs, stuff like that. But any policy over $250,000 is generally going to be medically underwritten, which means you have to be in relatively good health. And there are high-risk cases that can be placed, but they're going to be more expensive, obviously, because of the health conditions that we're working with.
And so, and who comes, how do they, see, I was trying to think about my husband. I think someone came to our house. A doctor came or something and examined him there. I don't even think he had to go to his own doctor. And yes, they did have a lot of medical records that they had to pull from things. But
that's what they do. What they'll do is they do all the above, actually. They will pull the medical records on their own. The insurance company does that. And what they do is they actually send a paramedic out to the house, and they do a simple blood, urine, EKG, and a quick medical personal interview with the client. It's about a 20-minute appointment, very non-intrusive for most people. And if you don't want them coming to your home, you can go to one of the local labs almost in any city.
And this whole area of changing their life insurance. Let's say that years ago you got life insurance when you were first married, or you had it, and you stayed until you died, and that was it. But now a lot of different challenges have come along. So the insurance company I guess they've risen to the occasion, and they've been coming up with all sorts of ways to. On one hand, they want to help the people. On the other hand, they want to keep their business going. I mean, so one hand washes the other. And you've been in this business for a long time, so you, of all people, must really have been seeing the changes.
Definitely. When I started in this business in 1991, there were a handful of products in the market. Now today there is an unlimited supply, bells and whistles, riders, and the products are just keeping the pace with what today's needs are. And those can be anywhere from waiver premium, long-term care riders, where you can actually access a portion of that death benefit for nursing home facilities. You can do that on an accelerated basis. There's terminal illness riders, which will allow you not to have to pay the premium if you're diagnosed with that, and or access up to 25 to 50% of the death benefit immediately, again, for a living benefit. So they've come up with these products because the market has made them. In the past, the life settlement market, what has it done? It's forced these people to offer a different solution to the insured. Because if that insured in the past could not afford that policy, the only option for him to do is walk away, and if there's no cash value, he got nothing for that. That was a horrible option for them, especially if you've been paying on a product for 10, 20 years. And then you realize, now I'm on Social Security, I'm not working, I can't afford to pay for this insurance anymore. I still want to leave my wife some money, my husband's money, whatever that case is. And what can I do? Well, if you call the insurance company, they're not going to give you all these options. They're going to give you an option of surrendering or walking away with whatever cash value you have.
That's really terrible.
And that's why we're in business, Anita,
Yeah.
because we give people all of the options. And we do not want to change anything people are currently doing unless we're 100% certain that it's going to improve what their objectives are.
It's very interesting. I have a friend who works, it's a big company, and what they do is they go to the hospitals and all the hospitals have their own auditing, and they get the insurance, people who've paid them, and then some people haven't paid, and these people go in and they take a percentage of the insurance that they haven't collected on because there's so much left there. And it reminds me of this, is that insurance is a very tricky thing, and that you have to really have some real experts to know what's going on, because some people just don't know. They just don't know how to get that money. And here you're sitting right in the middle of it, and you've been a very nice man. I mean, your mother's in the healthcare field. She's been here a long time, and you've seen a lot of this. And so you can appreciate what it is to an older adult who can now get some money and be free and be happy. And so I have to give you this number. You really do have to call Rob Colson. I think that he can really help you, and he has a lot of other things he can tell you about. It might not just be this. You might start off with this, and then some other things, he'll look at some of the things that you do own, and he'll tell you, listen, I have something you want to think about. And, of course, you can always talk to your son, your daughter, your lawyer. I mean, everything he does is really above board. So you have to be very careful, everybody. I always say that. Sometimes you hear people on the radio talking about things, and you just always want to check and make sure. But you can call for a free life insurance review. It's Rob Colson, Colson. Phone number is 800-218-5033. He's right here in South Florida. He will go wherever you need him to go. His website is US Insurance Auditors.com, US Insurance. And if you have the recent issue of Boomer Times on page 9, you'll see Rob Colson with his earphones from his last radio show, and it's called Time to Refinance Your Life Insurance. And there's a story about that, and I think that it's important for you. So that's what we do with these radio shows. We do try to help you to have a better life, and we of course target our market, who you are, the senior and the baby boomer. And so it's been great, Rob, having you on our radio show, and you always seem to pull the rabbit out of the hat.
Thank you for having me again, Anita. It's always a pleasure.
Okay.